The Nigerian Exchange Limited announced its half-year market index review on yesterday, implementing major shifts in the NGX 30 index and other key indices based on market capitalization methodology. Aradel Holdings PLC and Wema Bank PLC entered the NGX 30, replacing Conoil PLC and Julius Berger Nigeria PLC. The NGX Consumer Goods, Insurance, Industrial, and several other indices also saw changes, while sectors like banking and oil and gas remained unchanged. NGX CEO Jude Chiemeka reaffirmed the exchange's commitment to market innovation, with indices rebalanced semi-annually to track market dynamics. We have joining us Adebayo Adebanjo from Cardinal Stone. It's a pleasure to have you join us.
It's a pleasure to be here. Thank you.
Yes. Let's take a look at, the broader performance of the markets. That's the NGX. We know this time last year, the NGX was celebrating emerging the best performing index, the best performing stock markets in Africa. What's the story this time around? How have we done H1 as the local bourse itself?
Well, I think it's been an exciting time in the market. Yes, to be fair, relative to this time last year, not so exciting, but I think the index is making up for it, in the second quarter of the year. When you look at performance in the first quarter, the market did about, below 3%. And now, we're looking at 16.6% year to date, for the half year performance. And I think that, this performance is largely driven by, corporate actions, strong earnings, especially from sectors that, have been previously hit by macroeconomic headwinds, particularly telecoms and the consumer goods indexes, right? So I think that we're seeing a lot of recovery in earnings, and also some of the corporate actions that we announced last year, beginning to see them come to fruition this year. When you look at companies like Presco, Presco announced the acquisition of the Ghana subsidiary GOPDC, and now we begin to see that trickle into the company's H1 performance. And of course, the company has gained over 160% as of half year this year. Then you now look at telecoms as well, following the announcements by the regulator, announcing the 50% tariff hike. We think that this would also bolster earnings for these companies for the most part of this year. So I think the sentiment is pretty positive. And if you look at some other, very smaller names, also, doing very well over the course of the second quarter of the year. So I think that sentiment is largely positive in the markets. And also this can also be kind of pointed to increased foreign investor participation, in our market. So when you look at the latest data from the NGX foreign investor participation, you see that 2025 year to date, FPI participation stands at about 29%, relative to around 20% the same time, last year. So I think that, our improving macro story is bringing back a lot of foreign investors back into our markets, and this is also supported by very strong fundamental performance.
So an improving macro story, and perhaps we'll get deeper into that, the policies and reforms that may be supporting, as you've pointed out, the increase in foreign investor participation, even though, there are conversations that it's quite volatile, that they're just testing, they're in and out, right? We'll get to that, but you did highlight that a lot of the activity that we saw in the markets was mostly Q2. So what changed between Q1, the slow start, and then Q2, we saw activity, pick up? Is that the usual trend, or were there specific things that ignited investor interest?
Okay, so typically, right, in Q1, the extent of information that investors have is a function of the full year numbers. Q1 is when companies release their full year numbers. So as at the time, between February and March, nobody has any insights into how these companies are beginning to fare in the new year. But as of Q2, we begin to do Q1 numbers, right? So Q1 numbers now begin to give us a sense of where these companies are headed, right? So, what analysts tend to do is, even though it's not a perfect metric, but when you look at Q1 numbers, you tend to do a kind of annualizing to kind of get a sense of, okay, if we analyze this company's Q1 performance, adjusting for factors like seasonality, right? This company should do certain numbers by the end of this year, all things being equal, right? But of course, these Q1 numbers have been really decent, for the most part. Most companies have reported really, really strong numbers in Q1. So I think that has fueled, the renewed sentiment, in the market, right? You see a lot of corporate announcements here and there. You see that, investors are now looking at liquidity as well. So a lot of these companies which had typically been, illiquid for the most part of last year are also now becoming liquid. Look at Seplat, for instance. Seplat had been on full offer since December last year. And then sometime this year, around Q2, we saw, liquidity come back into Seplat. The company gained, I think, 10% sometime in the quarter. So I think improving liquidity, stronger fundamentals from Q1 numbers are the biggest fuel for the sentiments we're seeing.
And, in addition to that, you have highlighted, you mentioned earnings. We have another earnings season upon us. How do you see investors adjusting or rebalancing their portfolio ahead of that? And would you say that's perhaps what is, well, we've been in the red for the past 4 trading days, but some will say that may have been what has buoyed the markets to where it's at in the past.
Well, I think that the red we're seeing in the past couple of days is expected. The market has overheated for the most part of the past 3 weeks. So it's expected at some point, investors will take profits on their positions. So this is no surprise. But I think that for the most part, investors are also taking positions ahead of the expectations that they have of Q2 numbers. Already, the half year has ended, right? So we're now in the 3rd quarter of the year. So we should expect to see Q2 numbers anytime soon. So again, given how Q1 numbers have performed, right? If investors, or rather, as investors expect that companies will maintain a similar trajectory of performance, it makes sense to, to stick to these fundamentally sound names that would, report even stronger earnings, and this should also drive even increased investor participation. So think of it as investors just taking position ahead of a future rally that would occur when we see these very strong Q2 numbers.
All right. We can't wait to see, those numbers. But more recently, Dangote Cement and Dangote Sugar. I know you cover, the cements, quite closely. We saw bears on those stocks, on Dangote stocks, yesterday, quite heavy and impacted the markets. Let us into what's happening there. And also ahead of the listing of the fertilizer plant, I believe, later this year. Your thoughts on that?
Okay, so, for Dangote Cement, right, we think that the issue with the stock had been that, if you recall, sometime in 2024, the stock rallied to almost as high as almost 800 naira, thereabouts, and that was because of the increased activity from, some majority stakeholder at the time. So what we've now seen over that time is that we've seen a correction, in the stock, right? And so we think that even despite this correction, Dangote Cement still remains very, very fundamentally sound stock. When you look at the company's Q1 performance, we saw that the company is struggling a bit, in Nigeria and in its Pan-African operations. For Pan-Africa, we see that, volumes are kind of slowing down. And because Dangote Cement is not a price setter in those markets, right? A price taker in those markets. So we've also seen a bit of slowdown in prices, in those regions, largely driven by some macro factors, some election factors in some of these other African markets. Now, coming down to Nigeria, we also saw that volumes were lower in the period for Dangote Cement, even though prices remain really, really high. So we think that pricing will be the biggest driver of earnings for the cement sector at large, of which Dangote will be the biggest beneficiary, of that, right? So we think that at current levels, Dangote might not be so far from its fair value. We think that Q2 numbers might also give us more insights into how, the company has been able to remedy the challenges that it faced, in the 1st quarter of the year. Upon seeing these Q2 numbers, we'll now get a sense of whether we are not, valuing this company as it should, or if there's still any additional upside, yet to be seen. But we think that based on Q1 numbers, the company is not very far from its fair value. Now, speaking to the fertilizer listing, I think that's a very, very strong positive. I cannot say for certain if there's any other listed fertilizer company in Nigeria, right, on the index. So this is very, very positive. It also helps to diversify the index, so to speak. It will go a long way to increase our market cap as a market, deepen the market, increase, more participation, deepen liquidity, as well, in the market. And given Dangote's track record with all of his previous companies that are listed, right, we think that investor sentiment will be very, very strong upon listing of this company. We will see a lot of participation. We don't yet know how the company intends to come to the market, but if it comes through an IPO, we think that will be a very exciting time, in the market, and I think everybody's looking forward to that.
Yeah, the goal is 100 trillion, I heard. for the NGX in 2025. We'll see whether or not that pans out. Let's come to the semi-annual, biannual review from the NGX and the shifts that have happened. Some companies coming off the top 30, NGX 30 index, some joining, right? Specifically Wema and Aradel are now on that list. Off that list, we have Julius, Berger, and Julius, Berger and Conoil, I beg your pardon. So, I mean, give us a picture of what informs, just so everyone can have an understanding, what informs these shifts and what informs a company making it to that NGX 30 index.
Okay, so essentially, right, the NGX conducts something called a semi-annual rebalancing, which is twice a year. So the NGX 30 index is reviewed and rebalanced twice a year in June and in December. So that's what we saw happen at the end of trading on the 30th, I think yesterday as well, because the rebalancing was still ongoing. So you'll see that it kind of affected the performance of some subsector indexes because the rebalancing is still ongoing. So what the NGX does is to reflect changes in market capitalization and liquidity as well. This is done such that it's trying to ensure that at every point in time, the index accurately represents the top 30 companies on the index, and it is looking at market capitalization, which is size, and also liquidity. So looking to the names that have shifted, right, you see that like you mentioned, Berger and Conoil have been moved from that index. So when you look at their positions as of the end of last year, so Berger was around 29th on that index, right? But right now in market cap, Berger now stands at 38th most capitalized company on the index. So it made sense that Berger will be removed from that index. Also, Conoil at the end of last year was around 28th in market cap, but now Conoil has been moved to the 40th most capitalized stock. Now, moving to the ones that are now added, Aradel, when upon listing, was around the 10th to 11th most capitalized stock, given the size of the company. So it kind of made sense that Aradel will be added to that index at some point. And then, of course, Wema, at the end of last year, Wema was around the 36th most capitalized company, and now Wema is now the 30th most capitalized. So Wema is at the bottom of that list, following its inclusion, right? So it just kind of makes sense that as all these shifts happen, right, and of course, these shifts are not surprising because, some companies have listed over the course of the year. We've also seen banks also do significant recapitalization, right? So these shifts in capitalization of other companies would increase their own size on the index while shifting others out of those indexes. So it kind of made sense that at some point, as the market continues to deepen, more companies begin to list, these shifts will happen more often than not.
All right, Debbie, we'll see what happens. But I'd like to zero in on Julius Berger for a moment. We know, looking at the news, they may have fallen out of favors when it comes to contract retention with this administration. There's been a shake-up in management as well. What is your assessment of Julius Berger as a stock, considering it's now off that list, and its performance altogether?
Well, looking at the stock performance for the most part of the year, it kind of makes sense that Berger, having not performed so well this year, the company has not done any share buybacks over the course of the year. So whatever has dropped its market capitalization has been largely a price action, right? And like you said, I think the market is also considering the somewhat, in quotes, fallout, of the company with, the government, so to speak, as regards construction, activities, in the country, and of course the internal management shakeups, as well. So this is no surprise, right? But again, we think that Nigeria's very, very deep, infrastructure deficit, right, still creates a very massive opportunity for the likes of, Berger. Now, again, governments come and go oftentimes than not. It's very possible that at every point in time of government changes, more companies, will stand to benefit or be in favor of the government of the day from time to time, right? So again, Berger is a company that is continuing, right? So it's not going anywhere. So it's possible that this friction with the government might be resolved in time, or maybe it finds favor with another government of the day. But we think that the opportunities are still very, very massive for the company, given the extent of deficit that we have in our infrastructure stock as a country. So there's no real worries. I think the worries are short term for the most part, but we think that over the longer term, I think that a lot of value will still come to Berger.
All right. We'll be tracking that as well, and their growth strategy under this new management. Aradel, that's a company you covered quite closely. I remember the reports when they first listed or moved to the main board. I beg your pardon. There was a lot of hype around this stock. There were a lot of price expectations. And it's just been dancing around that 500. Yes, it's now one of the top 30 companies, but it's just been dancing around that 500. Some are saying, you know, their results are impressive, right? But it's not driving investor sentiments. What's the mismatch here?
Okay, so again, like I always explain, the issue with Aradel largely is a function of investor sentiment, given that the company was coming from a smaller exchange to the main bourse, right? So Aradel had been on the NASD for the most part of its existence, right? So if you look at the share price performance of Aradel while it was on the NASD, we saw, over maybe 300-400% share price appreciation over that period, upon, around the time towards its listing, we saw increased trading activity in that stock, right? So it made sense that all the investors that are piled into that stock while it was on the smaller exchange, took their profits, on the main bourse. So, I mean, as a new investor, if you're excited about Aradel upon coming to the NGX and then on the second day of listing on the new bourse, you see a lot of sell-offs, that would kind of spook, you as an investor. So I think that initial, sell-off or profit-taking activity that happened, following the rally on the NASD has kind of spooked the market for the most part. But I still think that, the company's fundamentals are very strong. I mean, oil prices at the moment even are higher than what we had forecasted, that the company would earn on its oil exports, which shows you that there's still a lot of upside for the company, right? And we always say that, Aradel is a very, very diversified, energy company. It has operations in the upstream segment. It also has operations in the downstream segment as well, which helps as to be like kind of a natural hedge against, volatility, in oil prices. So as an analyst that I am, I'm not very concerned, about, the company's fundamentals. I think they are very, very solid. I think it might take a while for, investors to bring that back into focus. But what the company is doing and will continue to do is to ensure that, it continues to deliver value to shareholders through dividend payments. I think Aradel's dividends, I think the interim dividend that was paid this year was among some of the most solid dividend payouts. So I think if the company continues that same track record of, strong dividend payouts, I think it would, improve investor sentiment, around the stock.
And they'll no longer be spooked by what they witnessed when it first listed on the main board. But yes, you would agree that the stock is, would you say the stock is undervalued?
Significantly, yes.
All right. All right. And I mean, you highlighted Aradel is well diversified. And let's come to, for a moment, Conoil. There are concerns that, their strategies is quite streamlined, and they have been taken off the NGX 30 index. What are your thoughts on Conoil itself and its performance and its prospects, right? Especially when it comes to diversification, side by side its peers in that index.
So I think Conoil, like every other downstream oil and gas company, is reeling from the shakeups that the Dangote refinery has come to be in Nigeria's oil and gas space, right? So it would be a case of not, betting on the right horse, that Conoil and every other player in that space is. Now, if you look at the earnings performance of some of these companies over the course of the past year, you will see that there was a bit of a jump, in their earnings, especially in 2024, when we saw energy prices skyrocket, and of course, volumes in terms of, product sales were also really, really high, right? So at that time, we did not see any kind of connection between, global oil prices and, of course, the byproducts like PMS, for instance. So oil prices could be going higher or coming down, and PMS prices will still be high, right? But upon the entry of, Dangote refinery into the space, we've seen that Dangote refinery has started to, bring back market fundamentals into how PMS is being priced. So you'll see that even recently, upon the reduction in global crude prices, Dangote refinery has also, lowered the price of the X factory or X depot, PMS prices. So we're beginning to see ups and downs in PMS prices, similar to how, Brent prices move. So what we're saying is the typical sources for products that all these other downstream players used to get their products from have become significantly more expensive. So you'll see that these companies are now reporting even thinner margins than they used to, because Dangote refinery has started disrupting, that space and is offering these products at even much, lower costs, right? So again, it's it's the ability of these companies to adjust to the new order of the day, to adjust to what the market is currently shaping up, to be. And so I think that's what is going to shape, how the downstream players are going to perform over the course of the year.
I mean, it's been interesting to see how these companies review their strategies with current realities. But thank you so much for that comprehensive breakdown of the performance of some of these stocks, especially for the first half of 2025. We'll see what happens in the second half. Once again, thank you for your time. Adebayo Adebanjo, Investment Research Associate at Cardinal Stone Securities.